Sanjiv Bhasin, hi, good morning. Perhaps L&T, much like Reliance 2 months back, it is at the cusp of a new big move in the stock?
Yeah, morning. Well, Aisha, we think we had a target of 1750 by the end of the year, and we are very close to that now. I think a little bit above, and you will be in very frothy waters. Actually, we have just on Friday put out a sell report on most of the blue chips where we think profit taking is on the card. We can now see evidence of greed on the market, and we think that second half of April will see a sharper than expected correction. So that would be a good time to revalue your book and look into it. Right now we are taking some cash off the table, and we think markets are looking slightly bit more frothy than we thought. On your talk of L&T, yes, L&T and Reliance are now the bellwethers, which after almost 10 years have become the leaders of the Nifty. But I think on the manufacturing side, on the capex side, there will be still some more room before we see more color on the balance sheets, before actually it will trickle down into earnings. So right now ahead of earnings, but we would say that these can be market performers in the short to medium term.
Sanjiv, since you do believe that the market is getting into a bit of a frothy zone, where do you sense one could book profits? And would it be really across the board, metals, real estate, PSU banks, if you've timed it right and you are, sitting on profits?
Yeah, well, Aisha, across the board, we've been a very, very strong candidate for re-rating of the white goods players. If you recall, 22nd February, we put out a big buy on Voltas, Blue Star, Thermax. The stocks are up 30% in less than 2 months. So actually we've booked profits aggressively. We still think the summer will be hotter than expected, but we think a large part of the rally in the price on the performance will be already has played out. So like you said, whether it's PSU banks, whether it's even IT, I mean, if there is, 2200, TCS is now 2450, and the color on the US side is not changing. In fact, it's getting deeper in the red. So I would across the board recommend profit booking. We think there could be 150 points upside in the short term, but definitely 8700 is going to be there in the second half of April. That will give you a much better entry point into the markets.
Sanjiv, why are HFC stocks moving up the way they are? There is nothing new about HFCs. Government focused on low-cost housing. I've heard that from last 15 years. Every government is committed to promote low-cost housing. So what is new and what is different, and what explains the 30% move in some of these stocks? Well,
simple, Nikunj. They have been outperformers on the result side, and they are the best way to play the Indian credit expansion market. We've again got bond yields go lower. Rupee has been in a very, very sweet spot, and the left out feeling by foreign retail investors is huge. So we've had 3 top picks, HDFC, LIC and Group Finance, and all of them have outbeaten the index and the sector. You can add a Bajaj Finance, which of course has been our top pick, but I think right now, like you said, it's a realization that yields are going to be lower, and that means that NIMs could actually expand. However, like you said just now, Aisha pointed out, this little bit of unbundling on the political side could be a little bit of a hurt. But I continue to think that these are sweet spots and sweet sectors. So you have to be stock specific. We think Group Finance can still deliver much ahead of the others, and HDFC remains the big bellwether in this mortgage finance.
Give me a stock idea, Sanjiv, where you still feel that 15% to 20% returns can be made by the end of this calendar year.
Yeah, so Suprajit Engineering, it's been one of my top picks all the way from 140, then 170. It's hit a new high of 240. We think it's the best proxy play on the OEM side, and it has transited from being the biggest player in the cable market in 2-wheelers into the 4-wheeler and defense side. We think that stock can surprise on the upside by at least 25%. The other would be Phoenix Lamp, again a subsidiary which is a merger buyout by Suprajit, and is one of the largest players in the halogenic market. We again think a 20% upside in that stock. We would go back to 2 of our old favorites, NBCC and EIL, which will be 2 of the biggest beneficiaries of the Build India scheme, and both on the construction and on the hydrocarbon side. Their order flows are, like you said, L&T, these are 2 brilliant stocks to be played out with hardly any debt, and numbers and margins going to surprise on the upside. So all these 4 would be our top picks, even when the market is looking slightly frothy.
And Sanjiv, your thoughts on Reliance? Is it still a buy for you, or do you think after the massive run up major part of the gain is already behind us?
Well, yes, in the short term, I think a major part of the gain is already priced in. But the left out feeling in Reliance as a stock and the technical outperformance after 9 years of doing nothing is going to see any decline being bought into. On the valuation front, now you will keep monitoring what Jio does as a subscriber base, and there will be upgrade of earnings, even though we think there will be hardly any material change on the earnings, at least for the few quarters. GRMs and good petchem prices are already built in. So we will have to get a big surprise on the numbers to justify any further price rise in the short term. In the short term, like we said, maybe we have reached most targets. Like you said, we have a target of 1500 by the year end, but that could be revised upwards if the Nifty has to go higher.
Sanjiv, before we let you go, since you do believe that the market is getting a little frothy, what according to you is going to lead to the correction? What's going to be the tipping point?
Well, firstly, greed is written across the board. We've seen FIs come back, and now, the conversion of ETF flows on the outperformance of the market, which generally tells you a top. Secondly, we think results will belie expectations. A large part of the good news is already built in, and if there's any disappointment, it can head lower. Thirdly, we think the rupee also may have already peaked out. And fourthly, I think, the extreme heat is going to see a lot of tugs and pressure on other global factors also, where the Trump rally is definitely seeing a lot of fatigue. So I think consolidated, we would think 93, 93.50 to be a top. And like we said, 8700 around those levels should be the where the tipping point will come when we approach the second half of April.